Hi guys, welcome back. Roy Cousins here, partnered with Light Forex Broker. Today we're going to touch base on a very interesting topic, but I'm going to couple that with some hardcore trading opportunities. I'm not going to leave you high and dry. But what I want to talk about is correlation analysis, Forex correlation analysis. You see the title of this session is Euro Block Commodity Crosses Are on the Rise. Now, if the title is a little bit confusing to you, don't worry about it. We're going to have the definition and the explanation when it comes to the different group, correlation groups. And then, of course, I'm not going to leave you high and dry. I'm going to touch base on two trading opportunities, specific trading opportunities that I got involved with. Right, I'm currently involved with. So it's going to be super interesting. Let's go ahead and dive in. All right, guys. So this is my personal definition for the correlation analysis. Right. So I'm talking about 8 different groups that I feel have low level of correlation between them. Right. Where within the group itself, the different assets have high correlation between them. So obviously the idea is to keep as many positions with low level of correlation in your Forex portfolio. You can see groups that are starting from energy, right, to indices, precious metals, and then of course all the currencies themselves also can be divided into subgroups. What I would like to do today is actually focus on one group, which is the biggest one. It is called the Cross Euro Block group, containing 9 different currencies, and it is the biggest group because it is a merged group. It's merged from 2 different groups. Let's take a look at those. We're talking about the Euro majors, right, merged with the block majors. Now, let me zoom in on the definitions here, on the terminology. Euro majors, pretty straightforward, right? We're talking about the representation, the representatives of the Eurozone. So Euro itself, British pound, Swiss franc. Then we have a different group, which is the group that relies on commodities. Their economy is heavily relied on commodities, and it's naturally becoming a group in itself. We're talking about the Australian dollar relied on precious metals, Canadian dollar relied on oil, and the New Zealand dollar relied on agriculture. And they tend to have high correlation between them. And when you merge, when you combine these two groups with all these, all the possible combinations you can have, you find this particular group, the Cross Euro Block. And I wanted to zoom in on this particular group, single out this particular group, because I feel it's hot right now. Okay, this is very fresh, by the way. We're talking a couple of days, 2-3 days. I mean, the trend had started before. We actually saw the first leg up. It was still uncertain. It was pretty early stages. Then followed a technical correction, and I think we're behind that technical correction right now, with regards to the whole group, by the way. Obviously, I'm not going to touch base on all of these 9 trading opportunities. I'm not going to get involved, right, with all these trading opportunities, but what I did was focusing on 2 particular trading opportunities here, the Euro versus the New Zealand and the Pound versus the New Zealand, which I actually I'm currently involved with. So we're gonna dive in and take a look at that. That's going to be interesting. But the main point is that all of those currencies coming from the Eurozone are going to outperform those currencies coming from the commodity, the block commodity group, right? This is the main idea. Now, all you need to do is focus or zoom in on 1 or 2 trading opportunities out of this group. Now I want to take you to the live chart and show you my real-time trading positions within this group, and we'll have a little bit of analysis, of course. So let's go ahead and take a look. Alright guys, it's been a wonderful ride on the pound versus New Zealand. In the previous upside move, I had a bullish campaign, and I started it when price was crossing a very important key level, a very important resistance. It was a resistance, now it's actually a strong support. I'm talking about the mid-low key level of 188.99. We can call it 189. As it was beginning to break that level, I got in and I built up a nice position up until price began to turn around, and then I began to scale out gradually. However, so I did make a nice profit, but I actually left a tiny position in place. I left one portion in place to keep this position alive, and that was actually got stopped out. And I'm talking about just a couple of days ago. Price was seemingly, right? I say seemingly because we're looking at the daily chart, and that's never a reliable chart, right? It is an indication, but it is very noisy, especially with these block, these Euro block commodity crosses. And price seemingly broke below 88.99, taking my stop loss level on that last portion that I had. So I had to take a loss over there, and it was offsetting my profit. So I had pretty much half of the profit that I expected to have at that point, and that happens, But the minute it grabbed my stop, it began to turn around pretty strongly, right? And I noticed that that turnaround happening so swiftly, I immediately knew that I was looking at a false breakdown that is only observed from the daily perspective. So I quickly turned into the weekly perspective and take a look what I was starting to notice. I was starting to notice this spike starting to form, and I knew that I was unnecessarily stopped out, so to speak. And I wanted to come right back in to a second consecutive bullish campaign right after a technical downside correction. Makes sense, right? So I got in. You can actually see where I pulled the trigger right here. Right? You can actually see my first portion. And I did that just when I noticed that spike starting to form. I mean, I actually can't believe the positive momentum is so strong even now as we speak. But let me take you again, let me show you the bigger picture. This is a marvelous setup. Very strong, very sound. And price not only came from the very edge, the bottom key level here, it did that in a spectacular fashion, right? Spiking that key level and turning around. By the way, it was a pretty impressive head and shoulders pattern later on. So that spike here was just the tip of the head. We had two shoulders and price broke up. So it went for a downside correction ever since it met the 200 daily moving average, and that's also not surprising. So this is why I started to pull out of my previous bullish campaign, right? But now I got right back in. I actually increased the position just a few hours ago, and I intend to keep doing so all the way to 95.44. So we're talking more. We still have about 400 pips here, right? Potentially speaking. So this is from this perspective, right? This is what I said. I'm focusing on two trading opportunities. This is one of them, right? Let's take a look at the second. The second is the euro versus the New Zealand dollar, right? Also presents a very similar technical picture. Same massive trading range that you can track back, believe it or not, to 2017. Now here, this is what I find to be fascinating, right? Because we know that price is trading very well within those limits of the symmetrics, and it also likes to touch base on those key levels, right? We can see it right here. We can see it right there, right? We can see it basically all over. But what we had here so far, I believe, was the first leg going down. Later on, we had the second leg, third leg, fourth leg, right? And then the fifth leg. So later on, I think we started generating the sixth leg. But what I find to be interesting here is the fact that the first upside segment, I mean the turnaround definitely came, right? And it turned around right at the lower section, which is exactly where it should have been, and started to build up the sixth leg. However, the first upside segment, which may be looking like a full leg, actually missed the higher section. Take a look. We're talking about the level of 72.21. It missed it by a very tiny margin, guys. Let's take a look at that margin, by the way. So the highest high here was 72.01, right? The level is 72.21. So we're talking about 20 pip. In the scam of, you know, the big picture, that's nothing, right? That's nothing. It's very tight. However, it did not reach the higher section. And that, to me, is very suspicious. You know what I mean? Very suspicious. What I'm trying to say is that downside move we had here in the past, in the last, I would say, month and a half, right? Probably we're looking at 5 weeks on the downside. I think that was a technical correction for the first upside segment. That's that, right? First upside segment that almost reached the higher section. That downside move we had was just a correction to that segment. Now, the fact that it missed the higher section here, the fact that price missed by 20 pip, that key level it was at 72.21, coupled with that downside move, and the fact, now this is the most important technical element, the fact that it broke, downside momentum here, broke when price reached this particular key level. Take a look at this black dotted line. Now, if you ask yourself, where is this black dotted line is coming from, then that's a good question. That is the 76.4 last level of correction, by definition Fibonacci correction, right? 76.4 of the first segment. So you can try it out yourself. Just take a 76.4 of the first segment. Take a look where it falls. It falls right here, right? At 65.30. The fact that it touched base slightly and, as you can see, exploded on the upside, including crossing right now. I mean, this is a weekly bar, right? It's not, it didn't, the week is still, we still have a couple of more days to the end of the week. Things could change. Price could come back and close below that key level, and that's not going to be a good sign for me. I'm going to probably have to pull out. But I have to say, by the look of it, it looks like it's a serious attempt. It looks like it's a genuine move here on the upside. And if you couple that with all the elements that I was just describing, right, the fact that it went straight to that 76.4, spiked it twice, and boom, reversed pretty intensely, and the fact that it did not reach the higher section yet, right, coming from the very bottom of that setup. And you can add up the really sound, bullish technical picture coming from the pound versus the New Zealand. Obviously, these two currencies are very highly correlated. Then I think it all makes sense that we have a pretty interesting trading opportunity on the upside, and it's not coming only from those two, also the rest of the pairs, the rest of the currency pairs that we saw in that block commodity, that Euro block commodity group. So yeah, I think it's very interesting. I actually pulled the trigger on this one just a few hours ago. Started small. My plan is to increase the position as much as I can in the limits of my own risk management. But I'm probably going to do that only after I'm going to have a weekly close back above that 67.37 here, right? I want to have a confirmation coming from the weekly close, and then I will try to increase the position here just as well. Alright guys, I think that's enough for today. That's enough for one day, right? I hope you enjoyed this session. I sure did. Till next time, be well.